Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Messer and Tim Stenivek from Bloomberg Radio.
Okay, so from retail to, how about a little M&A news today? As the makers of Cheez-Its, Eggo, Pop-Tarts, Pringles, and Special K join the company behind
these brands enough.
M&M's, Dove Bars, Ben's Original, Greenies, and Pedigree Original, not to mention some vet providers as well.
Oh, big time. My vet is part of one of their,
So you can go to
groups.
The vet, get your Cheez-Its, get your M&M's.
Yeah.
Get your dog, and
it's
get your dog
one-stop
fix.
shopping for the family. Well, the actual deal that I got to say has been in the works. We've talked about this for a while. Ever since Kellogg, remember, said it would separate into Kellanova and WK Kellogg. That was more than 1 year ago. That separation was completed in early October of last year. So let's get to the specifics on the deal. Again, Mars agreeing to buy Kellanova for nearly $36 billion. It does include debt, bringing together two major food companies in the biggest deal of the year. We've been saying this all day, all long on Bloomberg. Let's get to it, what you need to know, and whether the deal maybe kicks off some others in this space. With us is Bloomberg Intelligence Senior Retail Staples and Packaged Food Analyst Jen Bartashus, with us from BI headquarters in Princeton, New Jersey. Also with us, Bloomberg News consumer reporter Deena Shanker. She also joins us on Zoom. Hey, Deena, walk us through the deal, why it does or doesn't make sense here.
So basically, Mars is a massive company. They are privately held. They have a number of divisions, as you guys just mentioned. And in their food department, they have snacking, but their snacking is very chocolate heavy. So buying up Kellanova gives it a little bit more balance for the salty snackers amongst us, because Kellanova owns Cheez-Its, Pringles, etc. So Kellanova used to be Kellogg, of course. They spun off the cereal side, the North American cereal side, which has been kind of an anchor for them, weighing them down. So now here they are. They're growing as they what they call reaching commercial. They're initiating all their commercial activity. They said in their last earnings release, meaning that they still have more room to grow, which a lot of the packaged food companies cannot say. They've been seeing volumes go down. So Mars, we can't say really how much they've been growing or not because they're private, but this gives them a lot more shelf space in the supermarket and a way to balance their offerings.
Hey, Jen, come on in here because you cover retail staples and packaged food over at Bloomberg Intelligence. I'm curious what we know about Mars, since it is a privately held company, in terms of revenue, in terms of its revenue mix. What can you tell us about what it's going to end up doing with the Kellanova brands?
Yeah, thank you for having me. So when we look at Mars, they have a little over $50 billion in revenue. Of 59% of that, so nearly 60%, is coming from pet. So that is the bulk of their portfolio. So if you strip that out, that the remaining $20 billion in revenue is really in that snacking category. And when you think about it, Kellanova has about $13 billion in snacking. So those two companies, like those two segments together, are much more comparable in size than people might assume when they hear about how big Mars is as a company. So when you bring those together, I think we're looking at potentially up to a little over $1 billion in synergies that they can realize through the procurement of raw ingredients, through manufacturing efficiencies, distribution gains, and things like that. So there really is a lot that is attractive about this deal for both companies, especially in that snacking segment.
Yeah, Jen, I was thinking about, in our write-through, and Deena, in your write-through, you note that the packaged food industry has been dealing with declining volume, slowing growth, weakening global consumers, and so they're looking for innovation. They're looking for new markets to bolster sales. So, Jen, does that check all the boxes by doing this deal?
It really does. For Mars, because they are very chocolate heavy, as Deena said, it helps mitigate some of the risk because there's kind of some long-term structural challenges with the cocoa market that Mars is certainly aware of. For Kellanova, they've been growing in places like Latin America. They have a distribution business in Africa and Nigeria. So they have good exposure to emerging markets, which are growth areas that I think both Mars and Kellanova can accelerate their sales in.
Deena, I found the timing of this really interesting, given that Kellanova is barely a standalone publicly traded company. I mean, it hasn't even been on its own for a year at this point.
Let it have a year to trade, kids,
or why not just carve it out before the spinoff and a new publicly traded company and sell that part to Mars before going through all the public market rigmarole? What do we know about the timing, Deena?
I can't say what conversations they were having before they decided to split it up and when they were hoping to sell, or if this was a brand new idea. But the timing is good in that, they haven't completely filled out their commercial capabilities yet. They still have room to, Steve Cahillane, the CEO of Kellanova, told me that they're reaching their full commercial activity on Pringles, but not for all their brands. So it means that there's a lot of upside still for the company, which makes it a really good time to have another company swallow you up, because they see more value than you've been able to realize yet yourself.
Jen, sounds like you want to come in on this in terms of the timing.
Yeah. What I would say is, when we go back to when they were doing their original spinoff, part of Kellogg's original plan was to also sell off their Morningstar Farms brand. And ultimately, they retained it because they couldn't get the multiple that they thought that it deserved. So, part of the consideration certainly must have been about what kind of multiple could they have gotten at that time versus the multiple that they're getting now that they have a couple of quarters of strong growth in that streamlined snack business. So I think that that's part of the consideration as well.
Hey, Jen, in any of this, because I feel like we have talked pre-pandemic, post-pandemic, how important the pet business and everybody spending on pets and how big it's become. And, Mars, when you really thought about it, oh, candy, no, actually pet business. That was their big thing. Anything in this that says, as we know, nearly 60% of their sales, right, coming from that pet world, any sign that the pet business is slowing down?
Well, if you look at some of the comments that, for example, General Mills has made with regards to Blue Buffalo, there's certainly a slowdown in premium, and Mars does have exposure to premium. So it's not their entire pet portfolio, but it is part of their pet portfolio. And in addition, we've seen slowing in snacks for pets and treats and that sort of thing.
One of mine is on a diet, to be quite fair. So yeah, there's no treats. Anyway, keep going.
Yeah, so we've seen a pullback in treating, especially because people aren't as home as much. People are back at work. People are on the move a lot more. And so that portion of sales is also slowed for these pet companies. So, when you take that into consideration, growth in other parts of their overall portfolio is a very welcome thing.
Scout actually flings her bowl at us because she's a little ticked off that we cut back on the food too.
Well, I hope she's not watching.
She's got to lose weight. She's a little older. We're a little worried about her.
Deena, I just want to end with you. As we mentioned, an absolutely massive deal here. Does it mean a return to M&A when it comes to the space?
I think we will see more M&A because we typically see M&A when companies are looking for growth and they have a lot of cash on their balance sheets. And right now that is a fair description of a lot of the packaged food companies.
Well, the bankers will be happy and the lawyers will be happy. We got to kind of do our
cheese a dog treat for Scout?
No, although they love cheese.
That's synergy.
Yeah, there's a few carrots I do toss to Scout. Keeping her in the greens. Guys, thank you so much. Important story. It's among our most read, and it's certainly been something we've been captivated with all day. Bloomberg Intelligence senior retail staples and packaged food analyst Jen Bartashus and Bloomberg News consumer reporter Deena Shanker.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Hey, let's get to a Bloomberg exclusive. We talked about this yesterday. It did break after the market closed yesterday about a bid to break up Alphabet's Google, one of the options being considered by the U.S. Justice Department after a landmark court ruling found that the company monopolized the online search market. This is according to people with knowledge of the deliberations.
The move would be Washington's first push to dismantle a company for illegal monopolization since unsuccessful efforts to break up Microsoft. That was 2 decades ago. So let's get to it. We got Bloomberg Intelligence senior antitrust litigation analyst in New York City, Jen Rhee, along with Bloomberg Television co-host of Bloomberg Technology, Ed Ludlow, in our San Francisco bureau. Jen, let's start with the legal case here. and potential implications of the outcome. Just explain from the legal side what's going on.
Well, there was a trial last September. The Department of Justice had sued Google over conduct that was maintaining its monopoly in search. And specifically what the DOJ was concerned about and where Google lost was that it was paying companies a lot of money, about $26 billion a year as of 2021, to place Google search as the default search option at all key sort of access search points. So behind Apple Safari or behind Mozilla's Firefox, and on Android phones. And basically what this did is it just didn't provide an outlet for competitors in search, such as Bing and DuckDuckGo. And the judge said, look, first of all, this excluded your competitors because you're locking up all of these access points for search, and you're also depriving those competitors the data they need for scale to actually get to be better because they get that data via searches and they're not getting a sufficient number of the searches.
So Jen, harsh, fair, or likely in terms of a breakup?
In terms of a breakup, I think unlikely. I think expected that the Department of Justice would ask for that. As a matter of fact, they said so when they filed this lawsuit back in October of 2020, right in their complaint. It says they may ask for structural relief. And I would expect them to. They won on liability pretty resoundingly, and why not go for that? I think it's very unlikely, though, in this case, that is what will happen. I think there's some other options on the table for the judge that are a little bit more tailored and less drastic. He has shown himself to really be adhering to that opinion you mentioned at the start of this segment, the Microsoft case back in the 1990s. And that case actually cautioned against structural remedies like these under certain circumstances. And I think those certain circumstances apply here, too.
Ed, can we talk just for a second about kind of the historical irony of
oh sure
of a potential breakup of Google? I mean, this is a company that I think it's fair to say many would argue emerged post antitrust efforts from the U.S. government against Microsoft, and maybe wouldn't even exist now had the U.S. government not gone after Microsoft in the 1990s.
You guys know, like, I'm a student of history and I always do the research, but I was single digits years old in June of 2000 when the United States looked at Microsoft. And Jen makes her analytical point on the reality of a breakup of Google, but the point in the reporting, the detail of the reporting, is there are actually many options of specific parts of Google being looked at by DOJ officials and attorneys, at least according to our sources. And it's worth trying to understand how Google's search business works and the data behind it, and how the Android operating system for smartphones works, to kind of ask the question, how would this work in practice?
So how would it work in practice, Ed? I mean, how do you separate the Chrome browser from Google as a company?
Oh, Tim, I'm so glad that you asked. No, so
well played.
Basically, Google, in simple terms, has what's called a web crawler, or let's call it a web scraper. And what that does, company websites allow Google to go in and use the crawler to get information. And as a result, those websites appear in searches. One of the options sources tell us is being considered is give third-party searches, just like Jen outlined, access to that data set, or divest the data set, which I don't quite understand. I guess maybe Jen can talk about if there's been past precedent for that, but you would incorporate an entity responsible for that data. On the Android side, it works quite simply. Google does deals with smartphone makers. They get Android operating systems on the smartphones, but in return, Google gets preferential placement of its key apps in key positions on that smartphone, on the OS. Good examples are the Gmail app or search. And it's those contracts that are being reviewed, a divestment, according to our sources, of Android. The easiest way of putting it is, imagine if someone said to Apple, you make the iPhone, but you must divest iOS. This is the reporting. I don't know how that would work in practice.
Jen, come on in. Any thoughts?
Yeah, I'm thinking about this, and the thing about Android, and the reason DOJ might be thinking about that, is because I said before, this judge seems to be really adhering to that Microsoft opinion from the year 2000. It was an appellate court within his circuit. And in that case, the court said it can be easier to divest an entity when it was once independent and it was acquired rather than developed internally. So Google developed Chrome internally, but it acquired Android. So the thought here by the DOJ may be we might have a judge that's more amenable to the idea of divesting Android rather than Chrome. I still don't think, though, that this judge is going to go that far. And the judge said these default agreements are illegal, and they're depriving the entities of data. So it seems to me to fix those two things, you prohibit those illegal agreements and you force share the data. It seems to me those are the most straightforward fixes for what the judge found was wrong. And I should also say that what the Microsoft court said is you have to have what's called really significant causation to require a divestiture. And that means the judge has to be pretty convinced that but for Google's conduct, it would not have the position in the market it has today. And I don't know that this judge got there. This judge lauded Google's innovation and ingenuity in developing the best search engine that's out there. And he didn't say it was only because of these default agreements that Google has strong share in search and Bing and DuckDuckGo don't. He didn't make the determination that absent those agreements, Google would be much smaller. And I think that's where the decision he would have need to make in order to require a divestiture in this case.
So go ahead.
No, go ahead, please.
If a divestiture is not required, what ends up being some sort of remedy that the Justice Department demands or that the courts demand?
I think it has to be a variety of things. I think those default agreements that the judge deemed to be illegal have to be prohibited. It means the company cannot pay to have that default search access spot anymore. That's one thing. I think there may be some sharing of data. It may not be all data because there could be some privacy issues, but there's certainly search data that doesn't implicate privacy that Google could share with its competitors to help give them a leg up to try to compete in the future. And I also think that there could be something having to do with AI. Leah Nyland's excellent reporting mentioned that the DOJ doesn't want Google to use its dominance in search in order to get a leg up on AI on its competitors. So maybe something that has to do with AI there, and
okay.
could repeat a decision like a choice thing.
That's what I wonder, Ed. Is this all about looking forward to AI, the next wave in terms of technology, and Google's and Alphabet's position in it?
Yeah, to go back to what we were talking about, I guess, web scraper or web crawler, the underlying focus on Alphabet is its work on AI, and that data, some of it is used in the training of the large language models that are powering Gemini. And that's what we're talking about here. You know, I find Jen is so smart. Like, it's such an honor to be on with Jen Rhee. She was in San Francisco the other day, and we met each other in person, and it's just really cool. But I would look at the stock down, significantly in the session, but not draw a causal link directly necessarily. But the point there being that look at the brilliant equities team reporting. We are off 17% from the July 10th high on Google, and a big deliberation is AI. It all goes back to, will Google be able to or not continue with its rate of development and commercialization of AI? Because that's what the stock trading is predicated on.
One thing I think about it, and I do remember the Microsoft case, which went on for about 5 years before all was said and done. Jen, how long does this lag, or how long does this go on? Because I do think how this can be an overhang on the stock. And just got about 30 seconds here.
This is going to take a long time. Google will appeal, and I think they'll seek to stay this remedies process pending that appeal. So you're tacking on at least another year to 2 years, and it may also appeal all the way to the Supreme Court. And I think it could get the remedy implementation stayed pending all of that.
Ed, back to what Jen said earlier about possible remedies when it comes to what Google can and can't do when it comes to search, what Apple can and can't do when it comes to search. What would this mean for consumers on the consumer end of things?
Well, I'm going to do my due diligence as a reporter and editor and say that Google will appeal anything that happens, and we don't know what's going to happen, but that is surely going to happen, the appeal. I think that this is the main point in the context of the handset market or smartphone market. It's a small player in a hardware perspective, but Android OS is so pervasive around the world. There are 2 billion monthly active users of the suite of Google apps. You can't just say to the world, the term Google, you're going to have to stop Googling, and I think that's the struggle here for investors and consumers alike. If the DOJ pursued on any path of action, what does that look like for us in the real world? It's very hard to conceptualize.
I can't do that. I'm sorry. I'm already in on it. Hey, one last question to both of you. Jen, I do think about like a case like this. Does it cast a chill on big tech in terms of a reminder that once again, big tech, regulatory, they're watching.
No, absolutely. They're all going to have to be careful. They may get to a dominant position because they've made a better product, but once they're there, there's certain responsibilities that apply, and they're going to be watched carefully for what they do and how they may or may not exclude their competitors. And if they do something that excludes their competitors, they're going to have a very legitimate pro-competitive business justification for it, or they're going to have a lawsuit.
Ed, what are you hearing in Silicon Valley? I'm just curious about how much conversation is going on about this.
Just micro-focused on the presidential election, with particular interest in J.D. Vance because of the continuity of FTC policy. That's what's so interesting about him as an individual. And then how does the Harris-Waltz ticket position itself re big tech and antitrust, knowing that J.D. Vance has that position? A lot of people talk to me about that, and I think we should probably discuss it more.
Can I just say...
Strange bedfellows, right?
It is strange bedfellows. I mean, we're living in really strange times, weird times, some say, but really exciting. And I got to tell you, it's so cool to have both of you who are super smart to be able to talk about this kind of stuff and really give a lot to our audience. So listen, thank you so much. Really appreciate it. Bloomberg Intelligence, Senior Antitrust Litigation Analyst. Of course, our Jen Reed joining us here in New York City, and out there on the West Coast, watching all things tech is our own Ed Ludlow, co-host of Bloomberg Technology on Bloomberg TV.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Josh Wingrove is Bloomberg News White House correspondent, and for Bloomberg Businessweek, he writes about what a Harris presidency would mean for business and the economy. Josh joining us from Washington, D.C. By the way, his story featured in the forthcoming issue of Businessweek magazine, coming out monthly. You can read it now on the Bloomberg and also at Bloomberg.com/Businessweek. Josh, so glad we could talk with you. What do we know about a Harris presidency? Can we just assume it's Biden 2.0 or no?
Pretty much. And, I want to meet you halfway on something earlier. There kind of are two branches of the executive right now, in a way. Because
well said.
Right. So Harris is running as an incumbent, but not really as an incumbent. And remember, back when she was a senator and when she was running for president the first time in that primary that Joe Biden won, she was really on the progressive end of the spectrum, and stuff that she proposed looked a lot different from stuff that Joe Biden would ultimately propose. And so the question is, which Kamala Harris is it going to be? Is it the sort of tough on crime California Kamala Harris? Is it the progressive wooing Senator Kamala Harris? Is it the vice president in the Biden administration? And it looks kind of more like the third one with sort of sprinkles of that. Her starting point is whatever Biden administration policy is. For instance, she's sticking by the call to raise the corporate tax rate from 21 to 28%. Remember, next year is going to be all about taxes here in Washington, a big fight over that, whoever wins the presidency as well as both chambers of Congress. And so she's going to sort of try to put some top spin, shall we say, on Biden policies with this announcement on Friday. I would temper expectations. I think this is important. Do not expect some giant PDF from her on Friday. It's not going to happen. But she's going to, give this speech and I guess lay out more of a rhetorical guardrail, shall we say, I think would be a fair expectation from her on the push to, go after costs. She's been saying she will do it on day one. Republicans have kind of been teasing her for that because, of course, she doesn't have to wait to day one of any administration to do anything. She's the vice president right now. So they are pushing on costs now. She's, I guess, going to say that she'll redouble those efforts.
You bring up a really good point, Josh. How does she put some daylight between the Biden administration's policies and what she's proposing, given that she is vice president currently? And a lot of Americans, if you look at surveys, are not so happy with the economy.
Totally, but for whatever reason, and voters are fickle, funny creatures sometimes, they don't blame her as much as they blame Joe Biden. So simply being his deputy has bought her some elbow room to run both as a change agent and as sort of a steady hand. She's trying to have her cake and eat it too. But what it shows is that the voters are open to, like a tweak essentially, and they are giving her credit that she would do things slightly differently than Joe Biden with her at his side did them. So that's sort of, a big one. All these other sectors, meanwhile, are trying to get their foot in the door. For instance, crypto has exploded in influence since Kamala Harris was, really writing the policy manual from page 1 or at least page 2 or 3. That is a sector, for instance, that we're told we do not expect some sort of big rollout in. It's going to be more Main Street focused, more entrepreneurship focused, and individual sort of family focused. Remember, she's a big advocate for the child tax credit. That could be a big one next year as well. I wouldn't be surprised if we see her pushing for that in those talks.
You say child tax credit, and I think of J.D. Vance on the Sunday shows talking a little bit about, was it the Sunday shows? Oh, sorry, Josh. All the interviews are getting kind of like...
Yeah, I think Sunday shows. They're blurring together here too.
Yeah, okay. So I won't say, I don't know when he said it, but he did talk about it, which was interesting given that that's a policy that the Biden administration has pushed and traditionally one that has been a talking point for Democrats. So there's not so much daylight between at least that policy with Harris and Vance.
Yeah, and this after Harris came out and said no tax on tips, which of course was something that Trump proposed.
Exactly.
And they're trying now. Joe Biden supports that too. Funny how that works. So they're picking each other's pockets a little bit right here on policy, and part of the reason is because this is going to be a very compressed campaign. You normally don't roll out a lot of policies as a presidential campaign past, say, Labor Day-ish. And so for her to start her campaign functionally, 2 or 3 weeks ago, if I check my calendar here, what day are we? What month are we? What's going on? She sort of tried to cram things out the door in the next couple of weeks. And that, I think, lends to her approach of not totally upending this, right? They're comfortable more or less with what the themes that they're talking about. Lower costs. They want to talk about expanding the cap on drug prices that currently applies to some seniors on Medicare. They want to talk about expanding required caps on insulin prices, $35 a day to some people. Voluntarily, the drug companies extended it to a lot of other people. Things like that. She's not going to be kind of jumping off the ropes with any grand new proposals, or at least that's the signals we're getting. I guess time will tell. But Friday is the beginning of it. We expect more policy speeches in the couple of weeks to come. And of course, all eyes on Chicago next week for that big convention.
Where is she on corporate America, our bread and butter? I think about our audience, right? And companies and executives and CEOs who are running, largely what we cover is the publicly held companies, but we do a lot of startups and smaller companies, a lot of small business as well, venture. Is she a friend or foe? How is it again a continuation? How are we expecting she will kind of embrace or not embrace those groups?
Here, and I should say off the top, I'm reading tea leaves, so it's a little bit of that, admittedly. Yeah. But I do think we'll get a bit of a break here in two directions. On the one hand, everyone who knows Kamala Harris will tell you her time as an attorney general is sort of baked in her bones. So if you are a company that is maybe on the edge of an enforcement issue or already dealing with enforcement or, dare I say, antitrust issues, I think there's a reasonable expectation that Harris might have a faster trigger finger on enforcement actions than Biden does, or at least as fast as one. She believes in using the tools of government when she thinks people have been wronged. We saw that in the massive settlement with the banks over housing issues when she was in California. But on the flip side, she comes from San Francisco. She's raised a lot of money from San Francisco. She's sort of seen to be a little more open to the tech sector more broadly. So I think the way of answering this is if you're a business that is, above board, you might have a bit of a gentler ear with Kamala Harris than you do with Joe Biden. But if you're someone tiptoeing on the line or stepping over it, the AG Harris might sort of erupt out of the Oval Office and come after you. So I think it's a bit sort of twofold on that. I'll note there are advocates for her VCs for Harris, for instance. So there is support from the business community. She continues to do really well with fundraising. And more broadly, as opposed to the tech sector, I would go back to that thing. She does want to raise the corporate tax rate. Donald Trump wants to lower the corporate tax rate. She wants to raise it by about 7 points. She wants to drop it by a point. That's a pretty big difference. But of course, a lot of that will depend on who wins the House and who wins the Senate. Our frequent guest, Frank Luntz, has been on Bloomberg Airways recently saying that he thinks Harris has a lot of momentum right now, and that the chances of a potential Democratic sweep presidency in both House and Senate are rising. So it's a very dynamic moment right now. A lot of good polls coming up for Kamala Harris. And all that is to say, if you're winning and you have momentum, you probably don't want to roll out a lot of controversial policy to sort of, throw a rock under your wheel.
I just want to say, Josh just mentioned 2 branches of government, Carol, not 3. So
Josh and I are on the same page. I'm just going to tell you.
Totally.
both parts of Congress. Okay, that's one branch. That's the legislative branch. Okay, and then the presidency, that's the executive branch. Okay, got it?
This is
We're getting there.
This is we're getting there. We're working our way. We're Schoolhouse Rock when we need it. Having said that, I do think about. I mean, she's waited on the Fed. I also think about like the people she's surrounding herself with. Josh, is that giving us an indication? Because it sounds like she's leaning on maybe some Biden people, maybe some Obama people. Like what that kind of says. A presidency, what kind of presidency she might have, and what kind of policies really matter to her.
There's a lot of continuity. It looks like from the big economic names. For instance, the people that are advising her on the economy specifically include Mike Pyle, Brian Deese, Bharat Ramamurthy. These are all people from Biden land. Ramamurthy also from Elizabeth Warren land, for lack of a better phrase. We are told that her list of potential Treasury secretaries includes names that would have been on Biden's list for potential Treasury secretaries, including Gina Raimondo, Lael Brainerd, current Chief of Staff Jeff Zients, and Wally Adeyemo, the current Deputy Secretary, who Harris has worked a lot with. So all that is continuity. But in terms of her people, her policy people, and they're not really totally, eco people per se, although one, Brian Nelson, comes from the Treasury Department, very high-ranking official there, particularly in the sanctions space. She's got a longtime policy aide as well, Rohini Kozloglu, who is in the mix right now advising her. So Harris relies on her people. There's not like a, Larry Summers type of figure right now, as so far as we can tell, so far as been reported, that is advising her on the economy. So I think in terms of the people staffing those offices, it's a lot of continuity from Democratic circles more broadly, as opposed to just the economy. Pulling a lot from Obama land and Clinton land more than Biden land. I think that signals that she wants to shake things up a little bit and maybe hints at, if I want to take a cynical view, an Achilles heel of our field sometimes, maybe she doesn't want to leave all eggs in the Biden basket. She's taken over the campaign. Everyone is singing from the same song sheet, kumbaya moment. But it seems like she wants some people who are not Biden people in the fold on her behalf.
Maybe she's doing it her way. Cue Frank Sinatra a little bit here, right?
Totally,
maybe.
Totally.
Yeah.
And the polls are right. I mean, it's things. They're I'm sure looking at the polls and thinking, hey, we got to be doing something right.
We'll also see what happens next week in Chicago, Carol, as the DNC gets underway.
Yeah, absolutely. And I also do think, as Josh was saying, and what the polls are saying, like if it is a real Democratic sweep, what it means for Congress, and if you have a Democratic Congress and a Democratic president, what that means for policy. Josh, such great stuff, as always. Josh Wingrove, White House correspondent, Bloomberg News. Check out his story coming up in the new issue of Bloomberg Businessweek. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Okay, so you're familiar with EVs, Carol.
I am.
You're familiar with hybrids.
Yes.
What about so-called EREVs?
Walk me through it.
Okay, it stands for Extended Range Electric Vehicle. I'd never heard of it. They're EVs that also have a small internal combustion engine. Before you say, wait, that's a hybrid.
Yeah.
No, it's not a hybrid because the sole purpose is to automatically recharge the battery. It gives them a whole lot of range. We're talking about more than 600 miles on a charge compared with the typical 300.
So a little motor to charge the battery.
That's it, the little motor, the little engine to charge the battery.
The little engine that
the little internal combustion engine. I didn't know about him until I read Keith Naughton's latest story for Bloomberg Businessweek.
We kind of adore Keith Naughton for many reasons. Truth be told, we learn, Keith.
Well, one of the reasons, Keith, that Carol and I don't know about these is because you cannot get them in the U.S. right now. You got to go to China.
Not yet.
Yeah, not yet. That's
true.
key. Okay, explain how these things work and how they're different from hybrids, and why you can't get them in the U.S.
So, a traditional hybrid like the Toyota Prius that's been around for over 25 years, it's primarily run by the internal combustion engine. That's what turns the wheels. And then the car's electrical system and braking, kinetic energy from braking, recharges the battery that's also in a hybrid that supplements the internal combustion engine. But the driver in a traditional hybrid is still the internal combustion engine, and the battery is sort of the backup. These extended range electric vehicles, EREVs as they're known, kind of flip the script on that. They are primarily driven by the battery. They run on electricity about 95% of the time. However, there is a small internal combustion engine on board that is not connected to the wheels. It's only connected to the battery, and it recharges the battery. So if you're driving on a long trip, 300 miles or more, you're going on your vacation, and the battery's running down, the internal combustion engine automatically clicks on and recharges the battery. You don't have to do anything. And you also don't have to stop at a roadside charging station and sit there for a half hour or more while it charges. So it extends your range, up to 700 miles.
This sounds like, okay, holy grail, found. This sounds brilliant, is it not?
It is a very smart solution, and it especially addresses the things that have become roadblocks for pure electric vehicles. Range anxiety, we've all heard about range anxiety, right? That's a big issue in America. It's a big country with not a lot of charging stations yet. And price, because these EREVs don't require as big a battery because you have that internal combustion engine backup. So the battery is about half the size. Well, that lops $4,000 off the price of the car compared to a pure EV.
Okay, Carol's in here.
More affordable.
Carol's in here just saying, brilliant, brilliant, brilliant. Yeah, you might be excited about it, but I know some folks who aren't. The Sierra Club, for example, as you point out in your piece.
So not so great for the environment?
They're saying it doesn't go far enough.
They want zero emission vehicles. They don't consider the Toyota Prius a green vehicle anymore. They believe that if you're not zero emission, you're not helping to solve climate change. Toyota, by the way, has a very different point of view on that. And when you think about what goes on with these vehicles, they are mostly running in electric power. That means they actually emit fewer, global warming gases, carbon dioxide, than a Prius does. So, it is not a pure EV, it is not a zero emission vehicle, and that is the issue the Sierra Club has, but it goes a lot farther than traditional hybrids do right now.
What are the emissions on what are they called? EREVs. EREVs. What are the emissions on them, Keith?
Well, Carol, it kind of depends on how often that internal combustion engine goes on, how often you take a long enough trip to nearly drain the battery and the engine has to kick on. So that's pretty rare. I mean, what automakers tell us is, the average, daily commute for Americans is under 60 miles. So, when you have a 700-mile range on your car, you're not going to get to that internal combustion engine need until deep into that range. So, this, as Jim Farley, the CEO of Ford Motor Company, says, these cars are running on 95% electricity. So, that's far fewer emissions than you would get from a hybrid.
Hey, Keith, help me
understand. Better than what I'm doing right now. Better than what you are doing, Tim, right now.
What, my Subaru?
Sure.
Just saying.
Yeah.
Same with me. Anyway, go ahead.
Still got nowhere to charge in New York City, parking on the street.
It's a little tough.
It's a little bit of a niche issue that only affects New Yorkers, and New Yorkers don't really have cars. Anyway, we're not talking.
But this addresses that, Tim. I know you have a question, but that would address that. The city dwellers, the apartment dwellers who don't have a garage with a charger overnight, they don't have to be plugged in every night.
I love it.
Cars go for a very long distance.
Before I ask you how I get one, which is a long answer because it involves many years.
Moving.
I'm curious about efficiency and when that gas motor does kick on to charge the battery. We think of efficiency when it comes to internal combustion engines here as miles per gallon. How many miles per gallon in battery life do you get when that gas engine kicks on to charge the battery?
Yeah, I don't know the answer to that question, Tim. It's a good one, but again, it depends on getting to that point where you need the gas engine to click on. I talked to one person for the story who was over in China and rode around with a friend who had an EREV, for the entire time he was there, and they drove all over the place, and the gas engine never came on.
It's amazing.
I think that's pretty cool.
All right, so here's the question, Carol.
Hurry up, because I got another one.
How do you get one? You got to go to China for now, right?
You got it.
Yeah, move to China, but they are coming. The first one will arrive in the U.S. next year. Stellantis, the Chrysler parent company that also makes Jeep, and Ram pickup trucks, has an EREV version of its Ram 1500 pickup truck. They're going to call it the Ram Charger.
Tim is such a pickup truck kind of guy.
Such an easy thing to park on the streets of Brooklyn.
No problem there.
Yeah.
Anyway, go ahead. Good with the car seats too for the kids. Anyway, go Keith. Go.
So Stellantis says the Ram Charger will have a driving range of 690 miles.
Wow.
And they say it's being built, in their words, to pull in an entire skeptical demographic into the electric age, because this seems to be the answer to mainstream buyers' concerns about electric vehicles.
You know what I love in your story, you say America ceded the market for EREVs to the Chinese just as it did a decade ago with battery technology, which China now dominates. I just think about the mistakes that maybe we make as a country, right, in terms of thinking about the technology that we need to be focusing on. And I do wonder, will the U.S. catch up? Is this the way really forward?
It's an excellent point, Carol. General Motors actually pioneered EREVs 15 years ago with the Chevy Volt. I don't know if you remember this car, but it was a small sedan that ran primarily on battery power and had, an onboard internal combustion engine to recharge the battery. They did that. It didn't sell that well. It was expensive to make, so they lost money on every car they sold. And they eventually pulled the plug in 2019 as they were moving away from hybrid-like vehicles and going to pure EVs. GM's now bringing back plug-in hybrids in 2027, but they won't commit yet to saying it's going to be an EREV. So far, only Stellantis, even though Jim Farley, as I said, expressed all sorts of enthusiasm for EREVs. He has in a couple of different forums since he came back from a visit to China in the spring. Ford doesn't have one that they say is coming yet. Some of this could be related to regulation. It's not clear yet how the U.S. regulators will treat it. It probably won't get the same kind of benefits that a pure electric vehicle will, the $7,500 tax credit and so forth.
Yeah.
So there's a little reluctance from U.S. automakers to field these things.
Yeah, I do wonder, though, something like this, how it might move people to actually say, oh, I can get that. That makes more sense to me. Having said that, you understand this industry so well, and the cycles and the challenges and the move that we've seen over the last few years into EVs in a big way. Do you think this is what we will ultimately see all of the big American automakers focusing on? And maybe it takes a year or two, but this is maybe the route forward?
It does seem like an ideal solution for America, where we have the most range anxiety. And this technology works the best on the vehicles we love most, SUVs and pickup trucks. It lowers their weight, it extends their range. It just seems like a technology that would actually have a consumer pull instead of a regulatory push, which is what we've seen with so much green technology. Everyone I've spoken to about this technology they're like you guys. How can I get one? People are telling me about the story that they've read about them and they want to know where they can find one. So Jim Farley calls it an in-between solution, and it is. Maybe it's the bridge to the electric future, whatever. Yeah. But it seems like something that would resolve a lot of the issues that people have with electric vehicles, but still get them to drive one.
And better than a hybrid in terms of impact on the environment.
Yeah. So Keith, if okay, we could get the Ram next year potentially. When's Jim Farley at Ford going to have something out for us, or is there a chance that we could get some of these Chinese vehicles in the U.S. Anytime soon? I think the answer.
Have you
to
read
that
headlines
is no.
lately?
Yeah.
Seen an election?
I mean, I also read Keith's story, and at the end he talks about this.
Yeah. So President Biden wants to put 100% tariffs on Chinese EVs, right, and on Chinese cars in general, and Donald Trump wants to be even tougher. So getting the Li Auto L6 or L9 that I cite in the story and have pictures of, which do wonderful things beyond just having this great range. Getting them here anytime soon, not likely. So it's really up to the automakers in the United States, not just the U.S. automakers, because that would just be GM, Ford, and Tesla, right? But the automakers who operate in the United States, Toyota, Nissan, the Germans, all of them. And by the way, BMW had one too, called the i3, that then they stopped making. So they know how to do it. They just have to come back into the market with it.
All right, everybody, for your barbecue this weekend or next cocktail party, talk about EREVs and read this.
EREVs.
Unbelievable stuff. I love it.
Very cool.
This to me sounds like Answer.
All right, I can see you buying that Ram.
Keith Naughton, thank you so much. Bloomberg News auto reporter joining us there in Detroit. Coming up next, we drive to the close in a day where markets are a little changed. It's coming your way in just a moment.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, 18 minutes left to go until we wrap up the Wednesday trading session. Bouncing around a little bit, just a little bit lower, as you just heard from Amy on the NASDAQ 100. S&P, though, on track for its fifth consecutive day of gains, and we haven't seen that in some time. I had it at the top of our broadcast. What was it?
5 straight days.
Longest winning streak in more than a month.
Yeah, 5 straight days for the S&P.
You got it.
Okay, all right.
Yeah.
I listen sometimes.
I know.
Let's go to Montreal.
Let's do it.
Should we go to Montreal?
I would love.
It's where we find Dominique Lapointe, Director of Macro Strategy for Manulife Investment Management. Dominique, how are you?
Pretty good. Yourself?
We're doing pretty well, trying to make sense of sort of the shift in tone that we saw. Although I was on vacation, as now everybody knows.
Yeah, there's no shift in tone for you. But.
Yeah, I mean, from last week to being up 5 days in a row, the S&P 500. I don't know, like. People aren't talking about a 75 basis point emergency rate cut anymore.
No.
What are you keeping an eye on?
Yeah, well, I think like what this morning's CPI data told us about the market function or reaction function going forward is that like inflation maybe is not front and center anymore. Except housing, which was a little hotter than expected. The rest was what the consensus was expecting, which is very few inflationary pressure. So I think that the market and the Fed, rightly so, has shifted their focus on the labor market data, which have seen, I'd say, marginal sign of weakening. And also on the consumer side, retail sales tomorrow will be very important because that's where we have yet to see any sign of a crack or a slowdown, unlike in other areas of the economy.
As someone who oversees macro strategy and macroeconomic, financial market research, all the things. When you get up every morning, what is it like the first thing you really kind of want to know that's going on in the world when it comes to the global economy and the global market situation?
Well, we always watch what happened overnight. So especially in an area where there's a lot of movement in global central banks. So for instance, when we wake up and we saw that the Nikkei is down by quite a bit, we look at the Japanese market. And then at the same time, as we think that China is not necessarily reaccelerating, we're going to watch the Chinese data to see how it will impact global trade. But more or less, what we can say from that is the global markets still follow most of the time the U.S. development. So when I wake up today, I'll look at the global markets, but then I'll prep up for what sort of U.S. data is going to come in because I know that pretty much regardless of what happened, except big exceptions like Japan, the market will shift after we get some important data or some Fed speakers going on.
Do all roads really still point to the United States, or what happened with the yen carry trade remind us that not all roads point to the United States? What happens in the Japanese market and a shift in what they are doing really matters, certainly for investors.
Yeah, it did for sure. But this was sort of once in a decade move, I would say. If you look at one good approximation of how the unfamous yen carry trade was unwinded, it probably just happened 2 times over the past 3 decades, right? So the subprime crisis of 2007 is an instance when we saw such a move in short covering. And then you have to go back to 1998, probably after LTCM collapsed, to see such a short covering. So this was a big event. But once again, when you look at the data, it does seem to suggest that some of that trade has been unwinding. And so back to focus will be, again, the domestic U.S. data, because once again, the U.S. is what's driving most of the global economy. If the U.S. undergoes into a recession, the global economy will have a hard time staying afloat.
Do you see signs that the U.S. could go into recession anytime soon?
Well, at Manulife, we've always been more pessimistic than the consensus in the market on this. So it's been a couple of months that actually, for at least the time I was there, the market and the consensus has moved closer to our view of the U.S. economy. So we still think that we're going to go into a pronounced slowdown, right? And that might involve 2 quarters of negative real GDP growth. So that would imply like a very shallow recession. Maybe the unemployment rate will go to 4.7%, which is our point forecast. But at the same time, it's nothing like 2008, 2009. We don't see the same kinds of financial imbalances. But all I'm saying, though, relies on the fact that the Fed should start cutting in September, right? And even in our opinion, maybe they should have started cutting last month in July. But if they do so at a gradual but constant pace, we could say that the worst of the possible outcomes will be avoided.
How do we whittle all of this that you are saying down into investable advice?
Yeah, so we're moving a little more defensive right now, and not necessarily because we have this very sharp correction. Actually, we'd be buyers if there was another large correction happening after retail sales tomorrow or another data point, right? But at the same time, when you look at earnings for the second quarters, companies report still good growth. Surprises have been strong, but then you look at where the economy is going. I don't think that estimates are priced in for a consumer slowdown. That's where we're expecting, right? And so that means that probably we've seen the top for the S&P for this year. And when we look at our sector preferences, we shift a little more defensive, and we're going to gradually move towards more safe assets, adding on a little more government bonds. That was probably a good move to do over the past couple of months. And we're watching credit. Credit has still performed well, but we're on watch sign over credit.
You said you've seen the top for the S&P 500 so far this year?
I think it's like looking at where the data might involve and looking at where profits has evolved and not necessarily reacted to where the consumer would go. It's possible that we get negative surprises on economic data that would translate into a reversal in valuation and at some point lower earnings. So that would imply that not sure we're going to see other tops.
Big tech. Big tech. Stay, buy. You said, would be a buyer of stocks after another leg down. Does that include big tech, or where would you be buying?
Well, it depends on the magnitude of the correction. What I mean by that is when you see a very large reaction like we've had to the NASDAQ following the Fed and the non-farm payrolls, right? You look at this move and you're thinking this might be overdone, because when you analyze the details of the non-farm payroll, it wasn't great, but it was not suggesting that the economy was about to collapse. Actually, it was no layoff. It's just that employment growth has been slow. So to us, it means that it's an overreaction. And what I mean by that is maybe you want to buy at this point from a tactical perspective. But more from a strategic perspective, you're looking at earnings growth from the big tech. They've been revised down a little bit, so it's not something that we would stay away from, but it's also other parts of the S&P 500 where the market actually expects earnings growth to accelerate, and this is where we're a bit more skeptical considering where the economy is going.
All right, I think we're going to leave it on that note. Hey, listen, great to check in with you. A lot of macro things to certainly keep on our agenda, and you can see that's what investors kind of go from, certainly, as he said, U.S. data point to U.S. data point.
I mean, we're already halfway through August. So we got September, October, November, December. So
fast.
4.5 months to go.
Slow down. It's too much.
What's going on?
I know. Well,
it's like, yeah, what?
It just tick, 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 tick.
I know. The sands of time.
Dominique Lapointe, Director of Macro Strategy for Manulife Investment Management. Thanks for joining us. This is Bloomberg.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.